All right, good morning. So I talked about a year and a half ago about homeowners policy and endorsements. It's about to talk on auto, and then I just thought homeowners is just more important right now. So I'm going to do a little bit of a, if you were here a year and a half ago, I apologize. All right, or maybe you'll learn something better. So I took my homeowner policy, okay, and we will go over this. Homeowners is broken down into, it starts with coverage A, B, C, D. A is the amount of your house, and B, C, and D are percentages of A. Okay, so the house burns down, I have 626,000. Okay, if I have a shed, a barn, that's coverage B, that's 10%. If I have my contents, that's at 70%. This company allows me to take it down as low as 40, save some money. All right.
And what's the difference between 70% of contents, 70% of the value of the house for contents, and 40% of the value of the house for contents?
40% is like
$2 to me unless I have some kind of rocket number.
$250,000 for 40%.
No, I understand that.
Oh.
What's the difference in payment cost?
I'm going to answer you a little better on that. Well, actually, the difference might be $40.
Oh.
Okay. 95% of the companies do not give you the option to go below 70. That's it. That's their homeowners policy. Every company, I have 5 of them, and every company is 70%. All right, for contents. This one company does allow me to take those internal numbers down. Okay, so most are at 70, but yes, we could do 40. Now, if I felt I had more than $250,000, of course I can raise that percentage. The only thing I have a percentage that's worth over $250,000, of course, is my dog. We all know about Buddy. All right, but loss of use. All right, that is 30% generally. Most companies, that's all it is. This company, I can go from 30 to 20. That saves about $100. All right. Loss of use is when that house burns down, you need to go live elsewhere. Okay. Maybe for a year. You have to have all your costs paid. Your food, they'll even go with clothing, your hotel. So that can really, some claims can go a very long time, especially if you have a public adjuster involved. All right. That could just really take the time, and you better have enough coverage for it. All right. But that is 30%. So in this case, 125,000. That's A, B, C, D. E and F is your liability. All right. How much are you going to pay? Someone slips on your sidewalk. You always want the max they offer. I have $500,000. That's the maximum. I also have, this is an ISO company, and most are ISO, but I do have an MSO company. Farmers, they go up to $1 million. The difference in premium, it just kills me to see anybody with 100 or 300,000, because the difference in premium to get to $500,000, you're talking $15. It's just a no-brainer. Okay? So always max out on your liability. Liability is your most important part of your policy. All right? Now, when I looked at that, getting ready for this, I said, oh, so my premium is $916 for that. So when people say, oh yeah, I have homeowners, and I got it with Geico, and I'm paying $900. Okay? Yeah, same here. But then I look and I say, whoa. Of course, my agent's ripping me off, but I look and I say, I have $800 in endorsements. And that's where the important part of your policy comes in. That's why it's important to talk about it. A year of endorsements. So it's a difference between a good policy and a great policy. All right. The endorsements. First one, mold. I have $50,000. They give you 10 for free. Some companies, the internets, don't give you anything. Okay? But generally, most companies are giving you 10. Now, I tend to look at things maybe different than others. I will say $88, and I divide that by 12 in my head. I'd say $7 a month. If they have to tear up my basement floor to get to the mold, that's a lot of money. All right? People don't think about it. Now, we do not have a big mold issue in this area. But again, to me, it's $7. And then I don't have to worry about it. Why do I want to have to reach in and pay out an extra $40,000 because I thought I'd save $7 a month? I blow that on coffee every day. All right. Next.
Steve,
Yes,
are you going to get on about flood insurance?
I wasn't.
My question is, you can only get flood insurance if you're in a flood zone.
That's no, not correct.
You can get it anytime.
You can get it anytime. If you're not in a flood zone, then you're in a preferred zone.
I know that if you are in a flood zone, you have to have it, correct?
If you have a mortgage,
Yes.
the mortgage company will make you.
Okay.
Did that change, Steve? It used to be you couldn't get flood insurance unless you were in a flood zone.
Yeah.
Not to my knowledge.
Long
never-
time
20 years
it
ago,
was.
I was looking at a preferred flood price for my house for like $400. Ironically, flood insurance for my house is now $1,800. It's crazy.
18.
Yeah, 18.
I just remember when we
And
bought
I'm in
our,
Flood zone.
and I'm in a preferred area. You know
bought
where I
our
live.
first house
You're
on
60 feet.
Liberty
Oh.
Street,
Yes. Don't really need it.
and it was a row home, and we had to have flood insurance because we were in a flood zone. Don't ask me where the water was because we weren't near
You're probably near a river or something.
something.
The Delaware, 3 miles away.
Yeah, I don't know. But
Yeah.
we had to have it, and they said, well, if you weren't, you wouldn't have to worry about this because you could get it. Okay.
I don't know about that one, but
They were wrong.
yeah, I think I'd say Ralph's right. They were wrong. But, flood insurance is a good thing, but we're not in a big flood area here. All right, if I were writing insurance down at the shore, yes, I'm definitely accompanying that with a flood policy. Okay, which is not an endorsement on the homeowners. Okay, it's a separate policy. Except, not to go in the weeds here, but Farmers has come out in the last year and said they have a flood insurance endorsement, and they'll go up to $50,000. Okay. Now, next area, replacement cost. Okay, that's a gimme. Most companies will give you that automatically. All right. Some don't. Again, online doesn't, unless you tell them you want it. All right. So all your contents on the house that you're going to get paid without depreciation. Okay. I think it's important. Next. Oh, and that was $100. So it's about, what, $8 a month. Next, specified additional amount of insurance for coverage A. What that says is, cost for that's $80. All right. I get an extra 50%. I'm paying for it. So if my house burns down and it costs $850,000 to rebuild instead of $626, they'll do the extra 50% to give me coverage. Most people will carry 25%. Again, the difference was maybe to go to 50 was another $3 a month. Again, that's coffee.
They're only paying 50% of the extra 250.
No, 50% of 626. So they'll pay another round it to 300,000. Okay.
Pay the whole thing, yeah.
Yeah. You have building costs are exploding. You know it more than anybody. And you get a quote today and a quote because Home Depot is now out of materials, and these expenses are ridiculous. Okay? You need to be careful. And one other thing. I'm going to digress a little. On coverage A, B, C, and D, all right, they will pay out up to the max of each limit. So if your house burns down, it's not 626 and you're done. They can pay out the extra 62,000 for the pertinent structures. They can pay out $250,000 on the property, in the personal property, and then the loss of use of 125. So that claim could easily be $1 million by the time they're done. Maybe even go over $1.5 million with the additional cost. Endorsement. Okay. So, next one. This one is more, if you're the type when you're buying a car and you like to get all the bells and whistles, and that is me. So they love me when I come. All right, is earthquake. I have it, $219 for the year. Again, $18 a month. That's how I look at it. Now, do I think it's worth it? I'm like this. But if the claim occurs due to an earthquake, which we are on a major fault line, we've just never had a California style, okay? If it does occur due to an earthquake, your insurance is not paying, all right? Oh, I have a homeowners. I got it, homeowners, and I never really talked to someone like Steve. I just have average homeowners. Well, your average homeowners is not going to pay for the earthquake unless you're paying that extra money.
How much was it? 200?
$219 for the year.
Is that in the fine print that they will not pay due to an
Any
earthquake?
claim that occurs on a policy, yes. Any claim that occurs on a policy, you have to look at what caused the claim, okay? And I'll give you a better example in another minute, all right?
Were you saying that was a car as well? Or did I mishear you? A car for earthquake days?
No, I wasn't talking about a car.
Oh, okay,
It's okay. So I'm probably going to be the only guy in the block having his house rebuilt. All right. Ralph sells houses for a living, and people have got to say that $18 I saved. Can I really walk away from a $500,000 loss that's not going to be covered? So I look at it. It's my thorough nature, but that's how I look at it.
Can that be purchased separately? Let's say I don't want to contact, for Julie and I don't want to contact our insurance company for obvious, reasons.
Mm-hmm.
Can I just go to you and say I want to buy earthquake insurance?
No, I never heard that one. I never had to look into it that way. It's always an endorsement.
I think it's an
I
endorsement.
can look you up.
So that's
Yeah.
an endorsement on the policy.
On the homeowner's policy.
So Steve, okay, your house was demolished, you have homeowners insurance, but it was demolished by an earthquake and you don't have that endorsement, so sorry, you're on your own.
Exactly. And
Wow.
people don't get it. They say-
Is that considered act of God, correct?
Doesn't matter.
No, it's not really, and it's not going to get covered.
Acts of God
Right.
are not covered.
That's what I'm
That's right.
saying. Isn't that considered earthquake an act of God? Act of nature.
Act of nature.
Act of nature.
Nobody
well,
reads their policy. That's why you need to refer them to Steve for him
No, I
to
think
do
it's
it.
important to have the knowledge, but it just seems unfair to me that they,
They're in it.
well, that's the problem. People will go to Progressive, and I'm going to pick on a lot of people today. People will go to Progressive, and they'll say, oh, I have homeowners insurance. What do you mean it's not covered? And this is the problem. They need an agent.
All the time I say
They need an agent to say that actually they want to listen. That's why I will tell you, I'll sit with a client for an hour going over all this stuff, where others are 10 minutes in and out. Yes, sir.
So, say an act of nature, or act of God, whatever, is not covered. But when we get a storm,
No, it's covered, Chuck. You can't say
it
that.
is covered.
No, a hurricane is covered.
That's
Okay.
an act of
Tornado's covered. That's covered under wind. Hurricane's
It's all an
covered.
act of nature, just like.
I don't really care what you call it. It's covered.
In your policy, you have specific coverages.
You're not getting
Like
around
these-
it,
That's what you're getting to.
Every policy, and
No, I just don't understand it.
Yeah, it's tough.
I don't normally read my policies, but
Oh, you have Cindy.
a couple of years ago, I actually sat down and read the policy. I wonder if there's an endorsement for this. It always says on there, active war or nuclear
Is excluded.
excluded.
And it is.
Is there an endorsement for that?
No.
Okay.
So Iran sends a nuke over, we're not covered, okay?
Okay, I was just curious, because I seen that on a policy.
Believe me, if I could cover it, I would, but we're not covered.
Yeah, right. You don't have much time left, so I don't know if you want to get to
You
what.
also hear the term, earth movement.
Yeah, if you get to the, what's
So is
covered.
earthquake the biggest one that's not covered?
Probably.
Earthquake and flood.
Earthquake and flood, yes. Flood, you need a policy. Next,
And for flood, it has to be declared.
it has, I believe they,
It can't just be a big rainstorm.
no, it's like sudden inundation of water over a swath of land of like a quarter mile is where the definition will start for flood.
But don't,
And that's water going from the outside in. That's not your water on the inside.
That's not
but
hydrostatic.
don't most policies cover like up to $5,000 just for water coming in for any reason?
Zero. No. I mean, if you leave a window, if a tree, no, it doesn't. If a tree falls on your house, breaks your window, and then rain comes in as a result, that's different. That's fine.
I mean, if we just had a storm and I get water in my basement,
Aha.
I'll pay $5,000.
Okay, now you're into another area. Let's get into that area now for you. Water backup. Okay? Water backup. Again.
That was sewer.
No, let's just do water backup. All right? I'm already under the clock here. Yeah. Probably it's a very common type of claim. The water backup is generally that type of claim costs about $10,000. Okay? Your sump pump fails, water comes in. Well, let's look at that a little different. How come I'm paying an extra $75 to raise my coverage to $30,000? Well, I'll tell you why. If I have a finished basement, which I do, and that water comes in and it destroys all my furniture in the basement, well, it's not covered by the homeowners. So those who said, oh, I have it from Progressive, sorry, not covered, okay? You need to have coverage for water backup to pay for the resulting damage it's going to do. Again, what caused the claim? Some pump failed, water came in. So now all of a sudden you have the couch down there, your elliptical machine, and all that stuff is damaged. You need water backup. All right? And most people do not want to pay that extra $75, but you know, if they have a finished basement, they should. All
You
right?
have replacement costs on the other product, does that cover
No.
replacement cost off? No.
No. Again, this water backup gets triggered because it's a water backup claim. All right? Doesn't trigger the other thing. So, and most people have, like Chuck said, I have $5,000. That's more of a nominal amount they give you. But what are you going to do when the damage is 20? You're eating
Well, the
15,000.
biggest thing that goes is your heater, depending on the height, right?
Yep.
I mean, your heating system can go if it's in a flood. There's no repairing that, right?
Correct.
Correct, the National Gas Association determines if the heater is wet, it is condemned. It is,
There's your $5,000 plus.
There's 15.
Oh, yeah, $5,000 ain't paying for much when it comes to a flood in the basement.
Now, when we moved out of our house, the movers unplugged our sump pump in the basement. Our basement was finished, but thankfully nothing was down there. And
It flooded.
it was bad. Just to replace the carpet and to have somebody, cleaning service come in and dry it up, I think it was like $6,000, $7,000, something like that. And that was just carpet.
Yeah.
And the
It
cleaning.
wasn't a big area.
Yeah,
It wasn't a typically
But you
big
shut
area.
me on the hook for that, right?
we still own the house.
But it was their fault, they unplugged
Well, that's just not gonna.
it.
The problem here is a lot of people that
That's a judge.
do not deal with an independent agency are just not aware of this stuff. I have an HO5. Most policies are HO3. That's your typical homeowner's policy. All right? An HO5, an HO3 says all risk coverage except for nuclear or war. All risk coverage on the outside, name Pearl on the inside, which means it has to be listed. Okay? HO5 says all risk coverage outside, all risk coverage inside. It's going to be covered unless it's a specific exclusion. All right. Now I looked at that and I said, well, okay, usually I give it to high-end people, but this endorsement used to be $400 a year extra. Now it's about $100, much cheaper. So for, again, $9 a month, I'm taking it. All right. I have an $8,000 big flat screen TV on my wall. All right. I want to know I have coverage. Okay. Yeah, believe it or not.
It's really old.
It is old. Oh, it's not worth 8 now.
Can you,
wrap it up?
Yeah.
Sure.
Can you tell us the 4 points of what is covered? Like what fire, wind,
Covered.
like, can you, I forget what the acronym is or whatever, but there's like 4 specific or 5 specific coverages.
Well, an HO3 is going to cover just about everything you're thinking. Okay. And again, if you have a nice home, all right, Dave, I've never seen yours. I know yours is nice. Yours is nice. Should have an HO5. All right. Be happy you did. And lastly, I'll start to wrap it up here. Underground utility line coverage. It's a common claim now. Used to never be. Water line from the street going to your house. And you say, oh, it broke. I have to fix that. Whoa, $20,000 to fix it. That is about what the average size claim is for that. Oh, I have homeowners. No. If you don't have that endorsement, then you don't have coverage. Okay? It's important to know that, and I can cover it for $35 for the year up to $25,000 in this policy.
So what you're saying is endorsements are very important.
You just won the grand prize. Yes, that's why
Endorsements make the policy.
that's why I chose.
Well,
Most-
people are shopping by price.
Right.
They
Yes.
go online and they say, I can get it for 700 or 900. Okay, I'll do 700. What difference does it make? I have coverage.
I know.
Thinking that it's really kind of the same policy and it's
And a
not.
lot of times people are shopping that price and the only person they're insuring is their bank.
That's right.
They're not insuring themselves.
That's actually a good point, because when you don't carry homeowners insurance and the bank gets you insurance, I have my house for $620. Now my house is paid off, but still, if I had a mortgage, the bank is only going to get forced insurance for the amount of my mortgage. All right, which is horrible.
We'll do
it-
nothing.
Yeah. So there's more here, but that's,
Save it,
who said save it? Save it?
save it for next time.
Question
I
on
will save it. Sure.
Since the bank has you covered in that incident.
Yes.
And there's a disaster with the house, does the insurance company pay off does the forced insurance pay your mortgage off? Now you have no mortgage, but you have damage.
Yeah, they covered their interest only,
Okay.
not
And
yours.
So it's not like the bank gets that money and you still have a mortgage.
No.
No,
They pay
no.
off, yeah, they pay off their interest, it's just like car insurance, they pay their interest off.
Some insurances and some municipalities, if I'm not mistaken, the insurance company might have to rebuild because the property has to have whatever structure on.
That's a great question. You got good questions. I just have to answer his question. That's ordinance of law coverage. Local ordinance says, hey, that you have to use materials that were in effect 100 years ago. All right. Policies like online will have no coverage for that. Or if they do, it's a nominal amount. Mine has 25% of whatever the 626 is to go towards those costs. People don't think about that. Wow, what if they come in? There's a local ordinance that says I must replace it with materials from back then. You need to have that coverage on your policy.
Somebody knew their house, they had a complete loss, and they said, I'm just gonna take the money from, everything's been paid off our pocket, and move on somewhere else and then sell the vacant lot. And supposedly you couldn't do that because there had to be a structure of equal value of what was there.
Yes.
Township.
Having the HO5 raises my coverage to 25%, where most people have 10. Okay? And to me, for $9, and I equate everything to coffee since I drink too much of it. And, you know, it's a day or two in coffee. Now look at that, coffee. Items like personal property, jewelry, cameras, you can cover them. I cover them. You know, my wife is a budding little photographer, not like Chris. But I can tell you, Chris, he has some nice equipment. Not going to be covered under your homeowner's insurance. You use it for commercial reasons, so you need a commercial policy.